Morning all, how are you all doing? How is everybody this fine Thursday morning? Morning Ian, Christian, Martin, Virginia, Evil, Baggy, Amy, Michael, JC, Hazik, Day Trader, Mumo. Don't forget to hit thumbs everybody. Gregors, Steve, Chucks, Senji, how we doing? Don't be a bum. Smack that thumb. Right, so markets open, long the DAX, long the FTSE. Morning, Harold. Excuse me. So we've got this morning the PMI figures for Europe coming out. So today, news-wise, basically, 8:15 is the French PMI. German PMI is at 8:30. By the time those two are out, we know what the European PMIs are going to be because those two make up the vast majority of the PMI numbers for Europe. So that is kind of an amalgamation of those two. So we don't need to worry about that one. So that's 8:15 and 8:30. Obviously, this will have an impact on the market because it's euro. So obviously the DAX specifically is priced in euros. So we should see some movement on the DAX, and obviously the euro could well have a big move as well. So that's coming out this morning. Then at 9:30, we've got the pound PMIs. So that's going to affect the FTSE and obviously the pound. And then this afternoon, we've got euro unemployment and then the US PMI. So going to be back on at 2:30 this afternoon, and we'll watch the PMIs run for the US. So that's basically today's news. We'll wait for that to come out in the next 15 minutes. Last night, we had FOMC meeting minutes. So if we have a quick scan through that from yesterday. There we go. What happened with NVIDIA? We'll have a look at that in a minute as well. So a couple of policymakers pointed to downside risks for maintaining an overly restrictive stance for too long, so keeping the interest rates high for too long. Inflation could stall, so being cautious about reducing rates. They did not see it appropriate to lower funds rate until gaining greater confidence inflation is moving sustainably towards 2%. So they're saying the next CPI figure we want to see coming down. If that happens, that will be more likely for the drop in the rates. So again, it's all the same stuff as we usually get. We're going to be data driven. We're going to wait for the inflation figures to come out. Then we'll decide what's on interest rates. So there's nothing particularly exciting at all, really, out of the meeting minutes last night, which is kind of what I was anticipating yesterday anyway. Some weight the figures. Yes, there's nothing much else there. So June is the target for the first Fed rate cut. So nothing changed from what we had before. Other overnight news, there's NVIDIA. So looks like a bit of a pop on NVIDIA. A lot of whipsawing came in when the news came out, look, the earnings, but overly positive move for NVIDIA. Record revenue up 250%. Wow. Good job, NVIDIA. So that's it for the overnight news. I was just going to quickly look and see if there was anything, because I've only just got back from the gym, just to see if there's anything that came out of Japan. Doesn't look like it, does it? Okay, so we've got some economists predicting that the negative interest rates will end in April, next month. No, month after, February. March, April, yeah. So that's when we're anticipating that zero interest rate on the yen, which will obviously drive everything down against, well, should drive everything down against the yen. So we're a good 6 weeks potentially away. Desirable for Forex move to steadily. Who's translated this? Oada. Desirable for Forex to move steadily based on fundamentals. It is. Sounds like Yoda. He does. UADA declines to comment on FX levels. FX rates influenced by multiple factors. Yeah, okay, brilliant. So they are still saying, oi, do not think about rallying that yen. And they haven't. So basically just another, please do not devalue us, otherwise we will kick you in the nuts type statement, which is what we get, which is what we want, because we want that yen coming down. We want everything coming down against the yen, rather. So we want powerful yen. There is no defense line in FX. That basically is, we keep mentioning this 150 level. Yeah. So what he's basically saying there is there is no level that we're looking at for the US dollar yen to rally up to before we press the button. We're just saying we're going to press the button if you keep doing what you're doing. So it's just more indirect threats, if you like, which is what the Japanese always do. So yeah, ECB rate cuts, nothing else. So there we go. So there's your overnight news. So we got the news coming out in 10 minutes. Let's see what the indices are up to. TP1 hit on the DAX. That was nice and easy this morning. Look. So straight up, straight to target on the DAX. 2R, very nice break. This is more like it. This is what we're used to, isn't it? Or what we were used to. So trailing second half of the DAX. So it was a nice clean break. The opening range today, 162 on that 5-minute candle. We were rallying into the news anyway, into the open anyway. So this bodes well for a drop in the euro today. So the fact that the market is rallying here could potentially be due to the fact that they're anticipating a drop in euro. So let's just see what the euro is up to this morning. Rallying. Interesting. No, not rallying. This is the US dollar collapsing. So the US dollar is dropping hard at the moment. So that euro US dollar is not a gauge of euro movement. Let's use probably the Swissie's not a bad one. So yeah, no movement so far. God, look at that Australian dollar as well. Aussie's rallying like a crazy beast. What did I say yesterday about this Aussie New Zealand taking this double bottom bounce off of this weekly and 2 weekly low? Limit order triggers, people. It's not a myth. Did anybody see that video from the guy that outs all the fake gurus for Forex? Does anybody see that? Brian sent it to me yesterday, one of the guys that comes in regularly. I don't know if Brian's in here this morning. Hello, everybody else. Dimes in. Champagne, Sarah, Lucho, Whipping Post, Evans, Ismet, Florian. Yeah, so this video, it's worth a watch. I watched it last night. Iman Trading is the guy that outs all the fake gurus. 628 comments already. How a fake guru ruined his life in 2 days by live streaming. ICT exposed. It's a fantastic video. It's worth watching. I keep going on about it in here all the time. How it's a load of crap. There is no such thing as the interbank price delivery algorithm. It's completely made up by him to sell courses. And I keep saying it because I know people that work in banks, they've never heard of the bloody thing. So it's a really interesting video. Go watch it if you can. By Iman Trading. But that did make me laugh last night. Anywho, if anybody that follows ICT in here, go watch that. Stop it. Right, 4R. Jesus, we're nearly at target. 5R on the DAX. Nice break today. But just adjusting something there. Right, yeah, US dollar is weak today. Yes, it certainly is. Let's just see if we'll get the 5R hit on this. This is probably the fastest break on the DAX I've seen for a long time. We're 5 minutes away from the news. Go on, see if you can just get that 5R done. Wouldn't that be nice? So if you took the ORB, you will have taken the 15-minute pre probably. If you've taken the 5-minute opening range, that was too big today. The actual 5-minute open today. So the pre-market range was the only one that was viable today, really. Might stop out in that second half. We'll see. We'll come back to that in a minute. FTSE's rejecting the highs, though. So it might get hedged on the FTSE today. We'll see what happens. Right. Just want to see if that hits target. It'd be nice to hit target in the first 10 minutes, wouldn't it? Look at that. 10-minute break. Look. Open, 5, 10. Done for the day. That would be lovely. But the FTSE's going to hedge me, so it looks like I'm going to manage that for the rest of the day. Right, so let's have a look at the FX markets. So you can see from the RSIs, we've got a little bit of movement against the yen at the moment. So the Aussie dollar, basically, we've got ADR hits as well. Let's start off with ADRs, actually, because that gives us a better gauge as to what's going on today. So Aussie dollar on the move. So Aussie dollar yen is an ADR hit to the upside. Big, strong move off of this Aussie. I can't see anything in the news specifically that has caused that rally, but we got a nice big hit to the upside there. So drop down in 5-minute reversal is going to come in there. So it's about 17 pips, roughly a quarter of an ADR before you're going to get the reversal off the top of that one. So that's an ADR hit to the upside. This thing's been steadily growing, this Aussie. The Aussie and the New Zealand doing really well at the moment. Aussie dollar, US dollar, ADR as well. So big, strong move on this Aussie. Not quite sure what's causing it, but been rallying all morning. So just massive rally on the Aussie. And obviously that US dollar's weak as well. So so those are your two ADRs so far today. We may well get some more of these Aussies hit as the day goes on, because they are all pushing very, very hard. Aussie dollar Swiss also moving up. Aussie dollar New Zealand dollar doesn't look like it's doing much. Yeah, so Aussie, yeah, apart from that's pop, isn't it? Yeah, so Aussie dollar is a lot stronger than New Zealand today. So those are your ADRs at the moment. Yesterday on ADRs, I've got 2 minutes to the news. Tell you what we'll do. Let's watch the DAX. I might let that run. Do you know what? I'm just going to move that TP up. We're at 125 ADR already today. So I'm just going to move that TP up, because this thing is like a steam train today. I'm just going to get taken out with the trailing stop, because if we get a news spike on the euro and the euro collapses off the back of that news spike, the DAX is going to rally. So I'm just going to give this, because it's only literally a minute to go until the news. It's either going to get me out one way or the other on that second half. So we'll just watch the DAX. I'll stick the might as well watch the euro US dollar, even though this US dollar is collapsing like a rate of knots, isn't it? But we'll watch the euro US dollar as well, because that will give us an indication immediately what that euro move is. But let's just watch this and see if we can get a big one today. Be nice, wouldn't it? Pound US dollar also push hard. Yeah, that's because the US dollar's dropping. So 30 seconds till the news. Okay, here we go. Small gap down. You can hear some alerts going off. So not a massive impact on the DAX yet. A big, strong move euro. That's positive euro. Big positive euro. So PMI figures are going to be green across the board. So French numbers are up. We'll see what the German numbers are when they come out. Come on. Thank you. 46.8 off of a 43.5. That is a big hit. Big hit. And a 48 off of a 45.7. So that's a 2%, 3% change in data. So big, strong push on the euro there. So in theory, you would anticipate a drop in the DAX off of this. But as you can see, it's holding pretty well, which shows you how strong this DAX is this morning. There's a lot of stock buying going on this morning. A lot of movement in the market today. So I'm just going to let that run. I'm just going to let the trailer take it wherever it's going to go. Let's quickly look at what the FTSE's doing off the back of that. So FTSE's hedged. So FTSE hedge. Yesterday's low is my target to the downside. Looking for limit order triggers at yesterday's low. Upside target, I'm going to go with yesterday's high, which is just inside of ADR. So just inside ADR to the upside. So looking for either a rally down and a bounce out for an aggressive exit there, or a push up and bounce out for an aggressive exit there. So manage the FTSE hedge independently. I've made enough money to cover that anyway. So worst case scenario, it's a break-even day today. We've got a gap up situation this morning as well, which I didn't see. That's a hell of a gap up as well. Look at that. I'm just wondering if there's any companies in the DAX that supply NVIDIA. But the way that the stock indices tend to work is when you get positive earnings off of one company, all the suppliers for that company also get a pump. So it may be that in the DAX, we've got a European supplier for NVIDIA that is getting a boost off the back of this, possibly. Difficult to tell. Happens a lot with Apple. When you get Apple earnings and Apple earnings come out high, all these semiconductor component suppliers for Apple, all their stocks go through the roof. So you get one at the top and all the suppliers basically rally at the same time, which is why you get big moves in the indices when you get large players getting earnings, because multiple companies that are supplying that one company are all in the same index and they all get stock rally at the same time. So it could be to do with the NVIDIA earnings, but who knows? You can never tell what is moving something. Just moves. If it moves, we can make money. So Euro, big, strong push up there. So don't forget, this is only 50% of the picture at the moment. So the French obviously has come out as a positive. 15 minutes, we're going to get the German side of things. German economy is larger than the French. So this is between the two of them, they make up well over 50% of all European data. So this number will be an amalgamation of the two. So that spike that we've got off the positive could easily be undone immediately by the German figures, and then we're just back to where we started. So if German figures come out positive, we'll be looking at a 200% ADR day today, I suspect. So I'll watch that as we go. Right, let's look at the ADRs. So obviously, as you can see, we're going to start getting some ADR hits across the dash. There's another one going in. US dollar's getting hammered. A lot of movement today. A lot of movement. So Aussie dollar yen, Aussie dollar US dollar we've covered. Swiss yen. Oops, that's CAD. Swiss yen now extended to the upside. Obviously, the Swiss franc is going to rally off the back of the European move as well, which isn't good for me because I want the Swissy to... No, I do want the Swissy to rally. That's good. We'll have a look at my stuff in a minute. But yeah, so big move there, obviously, with the Swiss franc rallying off the back of the European figures. Euro yen, we've got a 125 ADR. I'm already short on that anyway. I'm not bothered about anything rallying against the yen because as soon as the Japanese power that yen up, everything's coming down against it anyway. It's just a timing thing at the moment, unfortunately. Euro US dollar, big extension to the upside. So I will be taking the 5-minute reversal on this one today. So at the moment it's there. It's quite a long way away. 30 pips, it's half an ADR, but I will be taking that one short today when we get the reversal alert, assuming we do. Ideally, what I'd like is a bit of a down move and then a rally up for a new high which we could get off the German figures, and then we get a nice tight reversal at the highs there. Pound US dollar rallied up over the top. So that US dollar, look at the pound getting a pump off the back of the euro figures as well. We've got a lot of news coming in this morning. Traders trim bets on ECB cuts this year to less than 1 point. So basically, just to explain what the PMI figures are, they are the kind of like the commercial. They're the inflation figures for the manufacturing industry, basically. So it's the same as CPI, the Consumer Price Index type thing. This is kind of the manufacturing version of that. So as these are going up, it means that inflation in the manufacturing industry is going up, which means that prices rise. Prices rising means customers pay more. Customers paying more means inflation goes up. Inflation going up means you don't drop interest rates. So this is why it's boosting the euro, because these are akin to CPI. What we want is the inflation figures coming down so we can drop interest rates. If PMI goes up, inflation goes up, we can't drop interest rates, which makes the currency bullish. So depending on what this number is, if this is green as well, we could get a sustained rally on the euro. So we'll have to wait and see what the next figure is. But pound US dollar, that's also a hit to the upside. I'm quite surprised the pound's rallying quite so hard off of this, but it is. And US dollar CAD coming down hard. So you're going to get a potential opportunity for a long on the US dollar CAD as well. Although I'm not quite sure why this US dollar is dropping quite so hard. But as you can see, it's coming down very, very fast. Coming down into a nice area of support. So if this one gets an extension to 125 ADR today, that's a lovely ADR reversal. So we'll see how we get on with that one. I'm Germany. No, you're not. You're in Germany. Morning, Rico. We got a lot of negative news in the manufacturing industry. Yeah. Let's see what the data says. Yeah. Well, if you've got negative news in the manufacturing industry, I would assume that is prices are going up in manufacturing, which means CPI, the PMI figures are going to come out as a positive, which is going to be positive for the currency. EU economy, don't forget Ireland. GDP is higher than Germany and France. Yeah, but it's tiny. Morning, Pot DJ. Sorry, typing failure. So, yeah, we'll wait for that news to come out. We got 7 minutes. So, yesterday on ADR, I banked 1.24%. So nice moves yesterday. Got out of a nice amount of stuff, basically. I think some of that was this morning. Where are we? Yeah, so New Zealand dollar Swiss closed that one out yesterday. So that was an ADR reversal from back on Monday. So that was your ADR hit Monday. Tuesday, Wednesday, out. Pound yen ADR as well. So pound's rallying hard today as well. US dollar Swiss, I can close that out. I'm going to close out this US dollar Swiss. Or should I do a partial? What should I do? Pound US dollar 125 ADR. I'm going to close the US dollar Swiss out. Reason being, it's in profit. I've made money on it already, as you can see. So I've had one failed aggressive drawdown control position on this, and a couple of successful aggressive drawdown control positions, which is why all this drawdown control has been done. So I'm closing that out just to bank some this morning. Also to reduce my exposure on the Swiss franc. I am long the Swiss franc, which means if that Euro PMI comes out for Germany as a positive number, those Swiss francs are going to come into profit. So it's going to be positive for me. However, I am negative Euro, which means that I am hedged on those two currencies. So I'm just going to reduce the exposure a little bit on the Swiss franc because this is going to go into drawdown, I suspect. Well, one of them is going to go into drawdown, which is good because it doesn't matter which way the euro goes. Either that's going to make money and that's going to go into drawdown, or that's going to make money and that's going to go into drawdown. Doesn't matter, does it? Because they both move together. So I'm just going to reduce the exposure on that. And it's a position I've been in since the 2nd of February. So I've been holding it for a month. We'll just cut that one and just bank it. So that's basically what I banked yesterday. New Zealand dollar Swiss made up the majority. I also got out the pound CAD yesterday. That was a simple one, straight in, straight out. Yeah, so ADR hit on Tuesday, out Wednesday. Nice in and out, easy peasy. Euro US dollar also got out of that one yesterday. We looked at this one in the live room yesterday morning. So just straight in, straight out, back to propulsion. So yeah, we've looked at everything else, haven't we? So there we go. So 14.5% banked on that account this month so far. There's going to be more entries going in today. So pound US dollar is going to be an entry today when we get a reversal alert there. Euro US dollar, I am going to take one on as well, or rather the EA is going to take one for me. And Euro yen, I'm already in. So I will be taking another position on that one today. That'll be position 5 on that one, so it's going to be a bit squeezy. Right, 3 minutes to go. Still in the DAX. DAX is 5R, 6R now, pretty much. My scale doesn't go above 5R because there's little point in going above 5R because when you've got to 5R, you're well over ADR and the chances of it going further are not that much. But today, it seems to want to go. This is the biggest move we've seen on the DAX for a very, very long time. So your gap up on the DAX is actually that big. So this is where the pre-market open was. This is the 7 o'clock open. This is the electronic open on the exchange in Frankfurt. So that is your gap today. So it's quite a big gap that they will want to come back and fill at some point. However, the speed of this movement, I suspect there's something going on. We may not even get back and fill that gap. So we'll see what happens. But that's a hell of a move on the DAX this morning. So just trading that second half. Obviously, there's a good chance we'll get another pop on that in 2 minutes. So we'll watch what's going on with the euro. So there's a few ADRs to look at. RSIs to look at as well. So we'll go through those in a sec after the news. US dollar dropping. Market expectations for Fed policy easing will not start soon. Yeah, well, June. We've just been told, haven't we? June. Well, we've been told again. You know, this is the thing. I said this yesterday in the live room. I can't remember which session it was, but we keep getting told. What was it? It was last night, wasn't it? You know, this June figure. Last year, when we got to terminal rate last year, we started looking at inflation dropping and how fast it was dropping. We were forecasting Feb for potentially the first drop. And then they were like, it's not going to happen. So we'll go with March. Yeah. And then they came out and said, it's not quite dropping fast enough. So we'll go with April. Yeah. And then we were like, well, let's go May. Now we're going June. Yeah. So what do we do next month? July? Then we're August. Then we're thinking actually 2025. So, you know, all that's happening is the inflation figure is not coming down fast enough for the Fed. And they are continuously just putting the date back. Everybody's doing the same thing, though. This is the thing. So it's out of our control. We've come down very fast, but we've got the bounce, which we were expecting, but we're not getting that drop. German figures, bad. Jesus. Okay, DAX getting little impact off of that, but the German numbers are negative. There we go. So complete undoing. So watch your reverse alerts today. You're going to get some reverse alerts on these. 42.3 on a 46.1 and a 48 as expected. So services as expected, manufacturing down 4%. That's a big drop. So we've had very big positives there, but a very big negative there. So they cancel each other out. So the overall PMIs are flat. Back to where we started. So we'll watch this. So we need to wait for the market to decide what it wants to do with those numbers now. So they've just come out and said it looks like we're going to not... Basically, this is how fast it changes. So traders bet ECB cuts this year to less than 1 point based on those PMI figures. Now they're going to go, oh, actually, probably is going to be more than 1% now, because 15 minutes ago it was a different story to what it is now. So we'll wait and see what happens. It's one of those news releases today which could go absolutely anyway. But bear in mind, we are a 125 ADR at the London Open. We've got the entire day's worth of trading to go yet. So this thing could be sitting at 225 ADR. We could be sitting 225 ADR in the opposite direction. And those are the days where I get an inbox completely full of, why is my ADR indicator broken? All of the green lines are below the red lines. Sorry, I say it like that because I'm visualizing the type of people that haven't watched the video and haven't paid attention to anything that I've said and are thinking that it's broken. Well, it's just indicating exactly what's happened today. But anyway, none of you are in here, obviously. FTNet, if you're up 14% on ADR strategy this month, I am only up 8%. I'm trading since mid-January. I don't understand why. Because you've taken different trades and you've done different things. Yeah, what Champagne just said, negative for Germany. Yeah. So if you've had negative news. Oh, sorry, negative. Yeah. So, I mean, normally when negative news is normally things going up. So this is the thing with PMIs and CPI figures. People talk, you can talk about them in a negative way, meaning that the numbers are negative, which is got one impact on the currency. But if the numbers are negative, it has a positive impact on the human race. So when inflation comes down, we get richer. That's good. When CPI comes down, the currency gets weaker. That's bad. So all PMI, CPI figures and anything to do with inflation figures are always positive and negative, because it has a negative impact on a currency, which has a positive impact on us as people because we pay less. Yeah. So it's always, when people say it's bad news, it depends if you're in manufacturing and finance or whether you're in a mortgage owner position, because it's a very different piece of information. So, yeah. But yeah, overall, the number is negative, definitely, for Germany, which is obviously negative euro. Out the DAX, second half. That's good. So got a 4R and a 2R out the DAX and a hedge on the FTSE, which we'll manage. So yeah, yeah, it looks like those figures might have been leaked. I'm not sure this move on the DAX is to do with PMI. It could be, but I mean, you would have, if there is leaked news, you would have expected the euro to have gone before the numbers, which it didn't. It went on the numbers, obviously. So we'll see. You never know. You can usually tell when there's been a leak because the market's already gone before the news. But so yeah, FTNet. I don't know why you'll be different to me because you're different to me. Yeah, you're not gonna. No one is ever going to get the same results as me because you're not doing what I'm doing. You're doing what you're doing. Yeah. So when you take aggressive drawdown control positions or when you decide to shut certain positions, it's going to have a different impact on yours than it is on mine. I'm using 125% of ADR for initial entries. If you're using 100, you're going to get different results. If you start your EA on a different day to my EA, you're going to get different results because I'll be in different trades. Therefore, my portfolio will be in a different position to yours. Therefore, my decision-making process will be different to yours. Yeah. When are you starting to do aggressive drawdown control at 2%, 3%, 4%, 5%? Depending on what that number is, and when you decide to press the button for aggressive, you're going to get a different result to me because your overall portfolio exposure is going to be changing. Yeah. I come in here and I show you what I'm doing, when I'm doing it, why I'm doing it. No one's going to do the same thing as me. You can't, because I'm not here 24/7 showing you what I'm doing. So you're never going to get the same result. If we were using the EA on autopilot together with exactly the same set files and we started them on the same date, we should get the same results. But we're not. So that's why you've got a different result. Yeah. So for the Swiss franc, could mean an up or a down today. So we got the reverse alert, as you can see. We've had a reverse alert south and a reverse alert north on the Swissy within 24 hours, basically. We are sort of sitting sideways at the minute. So these Swissies, be interesting to see what they do today. But as you can see, so far today, because we've had one news, it's cancelled itself out. So at the moment, we are basically back to square one. So we'll see what the market makes of this. The analysts will be busy scorecarding to decide what they're going to do with those numbers. And then we'll get a move at some point later on today, I suspect. So PMIs for the pound are coming out this morning at 9:30. So that is your next big news event. So we'll see what happens with that. But anything you've got pound-wise that you can bank is worth banking. I've got exposure both directions on the pound at the moment. So anything you've got in profit. So, for example, euro-pound there. Anything you've got in profit, like that one, is in profit. So let's say, for example, that euro powers up and we're back down here. I will take that one off before the news, basically, because if it is a negative news for the pound, this is going to fly up. That I want in my bank. I don't want it in drawdown. And if it pushes up to there, I can add the position on again and take it off later. So bank anything pound-wise if you want to. I usually do, just to get it in the bank, because I can't get it back. So hopefully those Swissies move today, but we'll see. So there's your ADRs. RSIs today, we've got a few. We've got Aussie dollar yen. That's extended to the upside now on the hourly. I'm already in this one. These yens basically still can't get a move. The fact that US dollar is starting to drop now is going to mean there's less chance of an intervention from the Japanese, which is going to ruin my paying off my mortgage month. When we get these Japanese intervention days, you can see my TP's down here. Yeah, where we get the 800% ADR intervention moves. Make sure you take full advantage of them. They will pay off. They will pay you for months. But doesn't look like we're going to get one now because the US dollar yen's coming down. So Aussie dollar yen, that is extended now, pushing up at the moment. Obviously still got positions on this. We've just been grinding away for the last 2 weeks since I got into it. So we're just waiting for that pullback on this entire leg. So it's basically, as you can see, we're waiting for a pullback on the last 3 weeks. So we've got 3 weeks worth of movement with no profit take whatsoever. So we're waiting for some kind of pullback into the 24.72. If they're going to continue to trend and it's going to be strong, we're going to look for a pullback into there at some point. We're just waiting for that Japanese yen to get some traction, and it doesn't help that the Aussie's suddenly taken off. But so that's extended. Aussie New Zealand is extended on the 4 hour. So we looked at this one yesterday for an entry. I said if it gets down and it hits this level, that'll be a beautiful entry. I was hoping to get an H1 RSI extension on it, but it just missed yesterday and it just missed today. Didn't get it, unfortunately. That's what happens when you use automation. The automation didn't trigger because it didn't hit the level that I asked it to trigger at. But that's the bounce point I identified yesterday where the limit orders would trigger. We so far got that. So looking for a pullback on this leg, 38 or 50. Somewhere like that. That propulsion gap is your obvious spot, which is also previous support, which we then broke through and retested it twice. Yeah, so that propulsion gap there that you can see is the support break. So that's the large order that they needed to break that support level. Came back, added more positions in twice to drive the market down. So when we come back, we're going to find them looking to sell from that level if they've short from up here. So that was a nice extension. Swiss yen, big extension to the upside on that one. First sell order went in this morning on that one. So we had the RSI extension this morning. We're now further up. So we're coming up above the 80 level. So there was a reversal alert this morning there. So that was your reversal alert this morning. So that's first entry on that one. Again, it's a yen pair. So got to be a little careful with this yen exposure. Just going to stick it down there for the minute, just in case they pump it. I don't think they're going to. That was also extended on the 4 hour. So we're coming up to lovely resistance on monthly level here. So we got this high area here that we're back up at. Yeah, so we haven't been able to get through this level. So looking for a pullback down on that one, but mainly through the yen. We want the yen to rally. Target just those lows at the minute, but obviously if an intervention move comes in, we'll be off the bottom of the chart. Euro yen, same story. Have 4 on this at the moment. Going to be taking another one today, probably in a second actually. Where's the reversal alert? No, I'm not going to get another one on this today because the reversal alert's going to be same level as that previous entry. So that's 125. We've gapped down off the back of the German numbers. So we've got the amalgamation coming out in 15 minutes, but that figure, we know that figure, it's going to be mixed. It's going to be slightly bullish. So we're going to get slightly bullish services PMI. We're going to get negative manufacturing PMI. That's what those figures are going to come out. So we know what they are. They will take into account all the rest of the Eurozone, but they don't tend to be different. It's very rare that they're offset from the German and the French. So Euro yen nicely extended to the upside. That one's above the 75 level. Again, we're waiting for that Japanese move. Euro US dollar is extended on the hourly. So there's an opportunity for a short there. Tricky one, this one, because we've got the PMIs on the US this afternoon. So if you get into this one, the reversal alert is going to be there, which will be off, whether it's ADR or whether it's RSI. That's where your entry is going to be. Obviously, the danger here with this one is we sit and do this all morning, suddenly get a reversal alert, and then those US PMI figures are going to come out this afternoon. And obviously, you could find yourself completely out of the trade in profit this afternoon or in drawdown. So we'll see. But that will be a key figure this afternoon, that PMI, because we're waiting to see what happens to help the Fed make that decision about June. Pound yen, again, another extension. I've got 3 positions on this one. We'll be taking another one on this one today. Or will I? No, I won't. It's too close. So I need this pound just to put a new high in. There's no bear candles here, is there? This is the trouble. There's no bear candles at all anywhere. So obviously the way that the MRA works is it uses the last sell order to find where the last batch of sellers was. When we break that level, we deem that the sellers have taken control. There hasn't been any selling candles, even though it's gapped down. It gapped down bullish. So we're not going to get an alert on this. So what ideally I need it to do is push up, have a little bear move, make a new high, then we'll get a reverse alert up there. Then I can take a second on this at that level. But until we get some bearish price action, I'm not really interested. So we'll see what happens with that one. But that's extended on the 4 hour at the moment. You are about to get an alert to extend on the hourly, but that's not going to be for another 15 minutes or so. New Zealand dollar yen extended to the upside. So another position went in on this one yesterday. Or this morning. This morning, I think. Yeah, New Zealand dollar yen. Obviously, Aussie and New Zealand both rallying hard at the moment. So that's extended on the hourly again. But as you can see, this has been extended since we got here. The original extension was all the way back here. Can't quite see it behind my head, but that was the initial RSI extension, which we basically got a 4 or 5 day accumulation out of. And then we've just had this grind from the New Zealand dollar, which has been going on and on and on. That yen isn't helping us at all. It's just sitting there doing nothing. So we've got nice divergence showing now, though. So with the RSI, we've got lower relative strength and we've got price moving up, which is bearish divergence. So there's no strength in this move. It's just a coincidence that the New Zealand dollar is rallying at the same time that the yen is slightly weakening. So we get divergence, which tells us that the next move should be a bearish move on New Zealand and a bullish move on the yen, which means you get that move, which is why divergence works. So New Zealand dollar yen, nicely extended. And we've got these US dollars. These are from this morning's move. So we just got it getting extended now on US dollar CAD and US dollar Swiss. So opportunities to get reversals on those. But I would probably want to wait until we've had the PMI figures out this afternoon, because this could rally in either direction, couldn't it? So banked 0.5% today. Didn't manage to bank anything yesterday. US dollar Swiss, I can bank a little bit more today, but I'm just going to let everything run at the minute. So got quite a lot of drawdown on at the moment, and most of it, as you can see, is because of this yen. So the drawdown on the yen is making up pretty much all of this at the minute. We got 5.5% there, 5.5% there, because that pound is rallying. So there's 11, 12, 13, 14% of that drawdown is all yen. This is the downside to running every pair when you get a squeeze, which is why the risk is reduced. If you were running this on the normal original set files, which are running at 0.2%, you'd be sitting in 30 to 40%. Not good. So it's slightly worrying that it's this high. However, this is at the moment the saving grace. So if we get a positive, what I would ideally like, and this is a really weird thing to say, I would really like some positive PMI numbers from the US this afternoon, because that will go into more drawdown. Yeah, which I'm just going to have to suck. That's nothing I can do about it. But what that will do is it will make the Japanese rally that yen, which will bring all the yen pairs down. So the best case scenario, unfortunately for me, is a little bit more pain to get that completely out of all yen situation. So we'll see what happens. But if the US dollar does start to drop this afternoon and we get that break, we will get some strength starting to come into that yen anyway, which will help. But it's whether or not it can overpower this pound at the minute, which is rallying like crazy off the back of the Euro news. And obviously we've got the PMIs coming out this afternoon. So that's annoying. That just missed my TP. That pound CAD. Should have been watching that this morning, shouldn't I? Yeah, so we'll see what happens with that one. But those are your RSI extensions. Hedging in massive drawdown now, the hedging account. It's banked 34% this month. So it's, banked loads, but we're getting into some DD on this, which is, like I said, when I was watching this on the server, we popped over to watch this running on the server last year, didn't we? Every now and again. Many times I'd seen it up at the 30s. So it's normal for the strategy, but it doesn't make it, when you're trading it properly, real, doesn't make it any less uncomfortable. I'm not used to sitting in that sort of drawdown by far. I've never been in that sort of drawdown before. So I said to somebody messaged me in Telegram yesterday or the day before about they were running a lower time frame version of the strategy. And I was like, since I've been running this live, it becomes ever so much more real when you're looking at it every single day. But yeah, this is hedging. This is just what hedging is. You are constantly losing money. You're constantly going into drawdown as you're banking. That's the whole point of it. You're taking both directions. When you get out of that direction, the other direction automatically goes into drawdown. So you're waiting for the pullbacks on the opposite direction. At the moment, we've got a couple of squeezes on. So, we'll wait and see. New Zealand dollar, obviously, I'm short. Aussie dollar, I'm short. That thing's rallying like a lunatic at the moment. Yen is getting pushed up because it's got no strength. So nothing to do with that one. But so there we go. No further movement on the FTSE. So just going to let that FTSE play out and look for a bounce at the lows and the highs of yesterday. See how we get on there. banked GU, EU, UC left on the table, and the yen pairs. Cool. Afternoon, Kennelly. Morning, Mecca. Banked 3% yesterday. You or me? When you look at monthly New Zealand dollar yen, very close to the 2015 high, not far from 2017 top. Yeah, well, it's just because the yen is weak. It's been sustainably weak for a long time. Yeah, so you know this rally, we get these rallies on against the yen. Yeah, they always get undone. Look, we get these rallies, they always get undone. Yeah, this is just a rally. It will get undone. This is why we use the 2472 MA when we're looking at trends, because these are the quarterly and monthly moving averages. So what happens is the market pushes for a month or two and pulls back. Then it pushes for a month or two and pulls back. If it's going to trend, it uses the 24 and the 72 as a, you know, they are the monthly, quarterly trends. So that's why they work so well. So what we're looking at is a pullback into the 2472. Or we're looking for the Japanese to go, screw you guys, and intervene. And if they intervene, brilliant. So we're looking for an intervention move, basically, if they do not stop. But the trouble is, intervention is based on US dollar yen, as you can see. So there's 3 intervention moves on the chart there. Yeah. And we've got smaller intervention moves, which we had more recently. You can see the size of the intervention move compared to a normal candlestick. Yeah, they're huge. Yeah, so you draw that. Can't really see, can you? You draw that size of movement onto where we are currently with the US dollar yen. That's where we're going to be in an hour, 1 hour, maybe 4, depending how fast they liquidate those assets. So, you know, that's what we are going to get if that does that. But if that does this, none of these other yens have got any reason to come down specifically. New Zealand dollar yen. Just because the US dollar yen is coming down doesn't mean that the New Zealand dollar yen are coming down, because it's the US dollar that's weakening. It's not the yen that's strengthening. You're only going to get a move across the board on all yen pairs if that yen increases strength. And they're saying all the right things. Ueda's saying all the right things, and Suzuki, they're saying all the right things, but it's doing. They're not doing anything at the moment. So this afternoon's PMI is going to be critical for the yen pairs, because if that comes out as a negative for the US and the US dollar drops, there's no reason for the Japanese to intervene. I'd much rather the US dollar went through the roof and the Japanese went nuke. Because that gets me out of everything. If the US dollar comes down, it only gets me out the US dollar. But nothing you can do. Just got to sit through it. Pound Swiss. Yeah, big spike on the pound Swiss. Again, so this market at the minute is so unbelievably difficult. With movement like this, it's just, you know, it'll all get undone very, very quickly and easily. We'll find out at 9:30. The fact that we're rallying the pound ahead of the news, I suspect there may have been a leak, because we got the news coming out at 9:30. This is either a speculative move by the market anticipating CPI or PMI increase, or they know. And if they know, they know. Fine. But yeah, I mean, this is ahead of the news, which is annoying, but nothing much we can do about it. Pound is also included in the euro pairs. I know pound is not the euro, but trading and financially they included in the euro? No. Separate currencies, separate countries. They move together a lot. So one of the reasons this is pumping may be because of the euro news, because the pound, if you look at the euro pound, you'll probably find it's not moving anywhere. It's completely sideways. It's actually come down quite a bit. Oh yeah, because we've got some pound strength, right? So this tells you what is going on with the euro and the pound at the moment. So what you'd normally find if you've got euro strengthening at the same time as the pound is strengthening, you get no movement. Yeah. So what this is telling me at the moment is that the pound at the moment is way stronger than the euro because this is coming down. So the euro is coming down against the pound, which means the strength in the pound right now is a lot stronger than the euro is. But these two move together. So when you find you get a big spike on the euro, you'll find the pound will spike as well because we are close trade partners. We're next door to each other. We're still trying to undo Brexit and figure stuff out. We've got Northern Ireland and Ireland. We've got the border between Europe and England being, or Great Britain being next to each other in the same country. So we are massively close trade partners. So their economy affects our economy. If it's going well over there, they're going to buy more stuff from us. If it's going bad over there, they're not. Yeah. It was very clear in COVID how much they were linked because we stopped going to Europe. Everyone in the UK, we go to Europe on holiday all the time because it's really cheap and easy to get there in the sun. When COVID hit, their economy collapsed because we weren't spending any money over there. But we were held up quite nicely because we were spending it all here. So we are very, very, very closely linked. So there is a possibility that this move on the pound is related to the euro PMIs. But you can tell it's not so much in this case because the pound is still going up. The euro isn't. Yeah, the euro's just had a negative reaction to the second half of its news, which is why we've got a whipsaw. So, yeah, we'll see. But it's difficult to unpick this one because it's one positive, one negative. So you have to wait for the market to play its hand and decide what it thinks about this. Don't forget, all market movement is based on what we're doing with interest rates. They need time to analyze the data and go, right, what do we think the forward guidance is going to be changed due to this data? And what should we be doing? Should we be putting more into or pulling more out of? So we just have to wait for them to absorb the data. If that turns into, next news is coming out in 3 minutes. That turns into a whacking great shooting star off the back of the final euro figures, we know they've made their decision. Because they've decided they wanted to buy it on the first news. They're not sure on the second news. The third news comes out. If that turns into a sell, they're not interested. Doesn't necessarily mean it's going to collapse, though. It means they're just not interested in doing that. We could well just sit there and do that. We have no control over it, basically, do we? So we have to sit and watch. You're on the boat, or the train, rather. Get off when you get off. I'm sitting in a similar position on the hedging strategy. Must say it's something I will have to get used to. Yeah. Morning, Neo. It's something you have to get used to, which is why I've got a very small amount in. Well, I say it's not a small amount. I've got a smaller amount in there because the main thing I said to the person in Telegram, I can't remember who it was who said it to me, but it was along the lines of watching something do something on a demo account is fine. Yeah. So we watched that strategy produce 140+% return in 9 months on the VPS. Live, fully unattended, just running away. Actually having skin in the game and having the psychological effect of actually being money that you are watching is completely different to having a demo account, because I couldn't give a monkeys if that blew that account. I can give a monkeys if I don't go on holiday this year, because that's what that account's for. Yeah, it's a completely different thing, and you treat it in a different way. So when you look at the drawdown on a demo, you're like, yeah, whatever. When you look at this, you're like, holy crap, do I need to close this out? Because I've made $5,000. I'm sitting in 8K of drawdown. So I'm down 3K at the moment. That's all. I'm only down 3K at the moment. But your brain is thinking that way. But your logical brain, my logical brain anyway, is going, yeah, well, this is what happened last year. And it produced 140% return. So this, for me, based on back testing and forward testing, which is what that was, that 9 months last year was a live forward test on unseen data with the same settings as the back test showed profitability on, did exactly what it said on the tin. But it's totally different when you've got money in it. It's a different thing. This is why I'm not an advocate of trading demo accounts. There's an advantage to trading demo accounts to get used to stuff. But if you're trading a demo account with a view to learning how to trade, there's no reason for you not to go, screw it, 5 lots long. That didn't work. I'll get another demo. It's not real. You're not going to treat a demo account as you will a real account, because you are going to make whatever decisions you want to make based on whatever you want, not based on paying yourself money, which is what this job is for, isn't it? So you've got to, I think, trade on a live account, even if it's just a small live account, but it needs to be an amount of money that you would miss, in my opinion. Yeah. If you go and stick $500 in and you earn $3,500 a month or something, you can lose it. Doesn't matter, does it? If you stick 3 to 5K in, that's going to hurt. That's your holiday. You're not going on holiday this year, love. Sorry. Why? Because I stuck $5,000 in there and I blew it. That's the consequences. So you need an amount of money that is actually going to make you make the proper decisions in real world. It's not paying the bills yet, but it's got to be big enough that you're worried about losing it. Which is why this account is smaller, because I'm worried about losing it. Because it is one of those strategies that I've back tested it for 3 years and I've forward tested it for a year. But you know, it doesn't make it any nicer, does it? Sitting in 30+% of drawdown. But it is normal. So we'll see. Okay, let's see what the market do today for us. We will see. RSI H1M5 placement by strategy on 21 plus 22.2. I banked yesterday 3.62%. Wow. I'm in a test for the next 3 months live. Cool. Sorry, placement from the 20th and 21.2. Still doesn't make any sense, Rico. But well done for banking 3.62%. Good for you. I think, are you talking about dates? Yeah, I think you're probably talking about dates, aren't you? Which is good. Right, so DAX coming back down again. So we are retracing that move. So there's a 150 ADR bounce there. FTSE coming down still hard. 9 o'clock news has just come out on the euro. There you go. So as I said, this is a negative number because it's an amalgamation of the positive and the negative. This is a positive number because it's a positive number and an as expected number. So it's mixed. So this is an amalgamation of those two, basically, which is why that was orange and these are red. So we'll see what the market makes of this euro news. But so far, as you can see, there is no huge move going in. So they're still absorbing this information, or the realization of this information is nothing's changed. Sit tight, guys. In which case, you'll find that if you have had any big extensions, they'll probably undo themselves. So we'll just get what we call A-shaped recovery moves, basically, which is basically panic. Oh, that's what happens an awful lot. You've heard the term buy the rumor, sell the news. Yeah, this is the rumor. Now we've got the news. So we'll see what happens, but we'll have a look at this afternoon when we look at the PMI figures for the US at 2:30 and see where we go. But there's nothing we can do at the moment. Just need to sit and wait and see what the market makes of it. So 9:30 is next news, which is your pound PMIs. So same situation, big positive numbers, huge pound rally, big negative numbers, drop. But if they come out as expected, could do absolutely anything. The fact that the pound's rallying at the moment, we need to decipher whether that is a leak or whether this is a speculative move. And if it's a speculative move, there's a 50-50 chance they've got it wrong, obviously. So usually they get it right. But that doesn't mean that we're going to, if they come out as green, we're going to get a massive spike. It means that they were right and they will hold these positions and we might get a bit of a grind. We might even get a pullback and then an add. So we'll have to wait and see. But bear in mind that will affect potentially the FTSE. So if you're in the FTSE today, I'm hedged. When 9:30 comes out, what I will do is I will move these well, the downside target specifically, I will move down because if this does get a massive spike on the news, I do not want to get out of this here. I want to get out of it when the news has settled down. So in fact, it's 9:05, isn't it? So yeah, I'm just going to move it down now. I'm just going to stick it down to ADR. In fact, I might go a little bit further than that. So I'm just going to stick it down to 125 ADR just in case we get a very big move off the back of the news. I do not want to be getting out there, obviously, on a short. So if it spikes up, though, that is only ADR. So there's a very good chance that if it does spike to the upside, it will run out of steam up there and start to drop. If it doesn't run out of steam up there, it's going to run out of steam at 125 ADR. So that one I've not got a problem with. This one, though, is a little bit too close. So I'm just moving that one down to give it room to expand on the news. Just so I can make a decision based on, what it's doing. It might be the wrong decision to make. What might happen is it might spike down on the news, hit that limit orders trigger and drive it back up again, in which case I should have left it where it was. But I've got the luxury of already having that in the bank today. So that hedge there at 140 is outweighed by the 226 profit. I'm up for the day regardless so far anyway. So I'm not under any pressure to get that right today. Let's identify the pairs with big swaps. US dollar yen, US dollar Swiss. What others? Don't know. Go and have a look at your broker. Why do you want to identify them, Evans? That's the question. Are you going to stop trading them because I got big swaps? If you are, just stop trading them. But there's nothing much you can do about it. It's a cost of doing business. All that a swap does is it means that when price gets down below your average, which for me is all the way down there at the moment on that one, when price gets down below your average, you're not actually in profit. That's your average price. So you have to go a little bit further to get out. There's nothing you can do about it. So, we had this discussion yesterday. I think it's Virginia or someone else was saying, or Amy, I can't remember, but saying about not going to trade a specific pair anymore because it's made a loss for them. But just because it's made a loss, it's like saying, I'm going to start trading gold. You take 3 trades and you lose all 3 of them. Oh, I'm not going to trade gold anymore. There's nothing wrong with it. You just got 3 trades run. Yeah. The next 2 trades are going to be profit. They're going to make that much. But you're not going to know it because you stopped trading it. It's the same with all strategies. This is what system hoppers do, isn't it? I'm going to try that strategy, try it for 2 weeks, make a loss. Okay, scrap that. Let's try another strategy, try it for 2 weeks, make a loss, scrap that strategy, try another one. And you keep doing that. What you don't realize is all you've done is you've started trading that strategy in a down tick. Yeah. The next 3 trades made 15% profit. You didn't take them, though, because you got out of the strategy after 2 weeks because you didn't give it a chance to play out. Nothing works all the time. It's going to fail a lot. Yeah, especially if you're using a stop loss, it's going to fail more than 50% of the time. And that could be 10 trades in a row go wrong and then return a 15R winner. But you missed the 15R winner because you got fed up with the 10R loser. But if you stop taking trades because they have high swaps on them, when that US dollar yen intervention comes and it moves down 800% ADR and I bank 25% on my account, you'll be sitting there going, crap. It's just a cost of doing business. There's nothing you do about it. And it hurts. It would be lovely if we didn't have to pay swaps. We do. So this is one of the downsides to position trading that you can't get away from. Swaps. Cost of doing business. There's nothing I can do. I'm sitting in some hefty swaps. If I sort by swap, that US dollar yen trade from the 16th of January, I've paid $242 in swap fees. Yeah. $242 in a month. Yeah. So it's cost me $242 to trade the US dollar yen on that one trade. But what can I do? Nothing. I can't get out of it. I'm in it. So it's just something. But if it worries you, take the yens out of the equation. Anything with a high swap, just take it out and don't trade it. But don't get cross when you see loads of stuff play out beautifully that would have made an absolute fortune. That's the downside. It's the same as everything. You know, when you go back to the bootcamp, the very first day of bootcamp, we look at why people fail in trading. One of the biggest problems is the psychology of trading is going tilt, getting cross. That's what makes most traders fail. And it's not a case of just being stopped out makes you cross. Going short on something, it moving down, you putting it to break even, it pushing up, and then it dropping by 15R, that makes you just as cross as if it had gone up and stopped you out there. Because you've missed all of that money. Your psychology now goes, the market owes me that. It took that trade away from me. No, you put a stop loss in there and you told the market not to give you any profit. Makes you cross. Missing opportunities because you decided I don't like it because it hurt me, or I don't like it because it cost me too much money, will have the same effect. Yeah. So, but it's a personal decision you got to make yourself. There is no right or wrong. It is expensive to trade the yen at the moment. Yeah. Interest rates are up there with everybody else. The yen is negative 0.1. The difference between those two is what we pay in swap. It's expensive at the minute. That will come down. Last year, we were paying tiny swaps. We've been spoiled rotten for 3 years. Now, it's back to, well, it's not back to where it was. It's double what it was. Double the swaps I'm used to paying. But all it means is, in the grand scheme of things, you just have to hold your trade a little bit longer than normal because you've just got to get that swap into profit, which is why H1M5 is struggling this month. I'm actually struggling to get money because I can't get stuff into profit enough to warrant banking it. I'm taking 0.25% instead of 0.5%, 0.75%, 1%, which is what I usually take. I'm taking quarters at the moment because the market movement is so tight. And also everything's just holding for such a long time. I'm holding stuff for 5, 10, 15 days that normally you would expect to be out of in 2 to 3 days. But we're not getting market structure. I keep saying this. We're not getting normal market structure anymore. We're getting push, pull, push. Yeah. That doesn't help us because the only way we can make money is on news. And we have to wait for the next news to make money, which means we have to hold it sideways for however long it is until the next news. And if there's a week of no news on the Aussie, we ain't going anywhere. There's nothing you can do about it. It's just different market conditions. And again, this is a really good example of why backtesting is utterly useless. Yeah. You go and backtest any strategy with a market reverse alerts EA before 2020, you'd be like, holy crap, this is the best thing since sliced bread. It's the holy grail. You get to 2020 and you're like, why has it not had a good year? It had a good year, profitable year, but nowhere near that. Then all of a sudden you look at 2021 and you're like, wow, that started making a load of money. 2022, fantastic. 2023, didn't quite make as much. Why? Because interest rates started going up and our swap fees got bigger, which means that our profitability dropped because we were paying more. 2024 are the highest rates we've seen in 20 years. This is the most expensive time to be doing this job in 2 decades. Nothing we can do about it. You either do the job and suck it up or you don't, but you can't control it. Same as the market. You've got no control over the candlesticks. You've got no control over what you pay. You have to use a broker. Broker has to charge you a swap. And the interest rates are what decides what we pay. And there's nothing we can do. So it's just one of those things. It's hard at the moment. Very, very hard. But that's life. Loads of extensions there. So there's lots of opportunities to get into new trades now on RSI extensions. So next news is in 15 minutes. So I'll be back this afternoon at 2. Sorry, no, I won't. I'll be back at 2:30 this afternoon. So live room schedule is on the website. There. So 2:30 this afternoon, we'll be trading the USA PMI figures. And then tomorrow, I'm just going to do an 8 and a 2 because tomorrow's news is nothing, basically. We've got Waller speaking in the morning, overnight, 12:35 in the morning. And then we've got the IFO Business Climate tomorrow morning. That's it. There's no news tomorrow. And it's a bank holiday in Japan. So I'm just going to run 2 sessions tomorrow. Just have a look in the morning and have a look in the afternoon, but they'll probably be quite short. we'll see what happens. But today is the big day for news. So all will be known by the end of the day. And then next week we come into more CPI and more interest rate changes. It's a busy week next week. We've got loads of CPI numbers coming out. And obviously we've got the Aussie rates as well. So, but it's very Aussie centric next week, as you can see. Not a lot of US based news next week. So it's all back ended. So, again, Monday, Tuesday, probably sideways, but we'll see. Right, so I'll be back this afternoon at 2 o'clock. This is the new EA just testing on proper lot sizing. I decided to run some proper tests. So yeah, I'll be back this afternoon at 2 o'clock, and we'll see what happens with the US session. If you got anything you need, let me know. I'll be in Telegram or Discord. Somebody's getting spammed again by a scammer in Telegram again. So I'm going to get rid of Telegram. It's just too many scammers. Too many scammers in there. So I'm sure they'll find their way to Discord, but I'm hoping there's a better way to deal with it in Discord. So, but Telegram's just full of them. Absolutely full of them. Anyway, so I'll be around if you need me, but I'll be back this afternoon at 2:30. Anything you need, let me know. Otherwise, I will see you guys next time. Have a good one.